All right, what is happening, everyone? Welcome back to another Dividend Happy Hour. What a crazy week on the stock market. I've got a couple of oh, it says I'm frozen. Fast Eddie, I'm frozen. I don't think so. I think I'm good. Let me know if I'm frozen in the chat, guys. But yeah, what a crazy week in the stock market. I've got a couple of portfolio milestones that I want to show you guys tonight. We'll get into that in just a moment. Before we do anything, though, I do want to say, guys, today's stream or tonight's stream. Okay, good. It looks like it's good in the chat. Thank you, guys. Tonight's stream, we're gonna cut it a bit short. I think we're only gonna go for about 30-40 minutes, somewhere in there. I'll be honest, I'm really not feeling that good. I've kind of been feeling like a cold or possibly even the flu coming on these past couple of days. Oh, the audio is slightly laggy. Okay, well, I apologize there. As long as everything's good. But anyway, what I was saying was I think we're going to cut tonight's stream a little bit short, maybe go about 30-40 minutes. Like I said, I'm really not feeling that hot. But I still wanted to hop on and hang out with you guys for a little bit. And I'll also, with that said, apologize if I sound a bit congested, because I'm definitely feeling it coming on. Yeah, Salvatore says drink emergency. I've definitely been staying up on my vitamin C and all my vitamins, getting a lot of zinc, magnesium, all that good stuff. It's just that time of year, though. It's just that time of year. I know there's a pretty bad flu going around. I know a handful of people who have been sick, but man, I keep seeing technical difficulties in the chat. But yeah, anyway, I won't ramble on about it too much longer or anymore. But yeah, I just wanted to let you guys know. And like I said, I still wanted to get some stream time in and hop on at least for a little dividend happy hour. We'll call this one a dividend happy half. Dividend, what should we call it? Yeah, I guess a dividend happy half hour is what we're going to go with. But real quick, guys, I want to jump over and show you a couple of milestones that happened in okay, so Anders is seeing it too. Okay, well, it's interesting. Some of you guys say it's good. Some of you guys say there's a lag. For those of you who it's laggy for, I apologize. But I want to show you the two milestones that happened in the portfolio this week. And like I said, what a crazy week on the stock market. Let me know in the chat, actually. Raise your hand, drop an emoji in the chat right now if you are at all-time highs in your portfolio. I expect it's going to be a flood of emojis, but let me see them. Who is at all-time highs in their portfolio? Let me know. Okay, jumping over to my dividend portfolio tracking spreadsheet, which, as you guys know, you can start using this to track your own portfolio. There's a link to this spreadsheet in the description. What we're looking at right now is just my main taxable brokerage account over on Charles Schwab. And as you can see, officially, the taxable account has crossed the six-figure mark. So just in the taxable account, we are now at over $100,000, which is a huge milestone. This is $100,000 that I can touch and do whatever with it any point in time for any reason without any penalties or any restrictions. $100,000 of liquid cash if I need it, not, and I don't think about my portfolio that way, my taxable account. The money that goes in here, it's locked away in my mind, but it is still cool to know that in a pinch, when the unexpected of unexpected events happens, it's good to know that there is this here to fall back on. And that's a pretty cool milestone. But with this six figures in the taxable account, this is going to bring the combined portfolio value, so the taxable and the Roth, officially to $125,000, which I think is another, pretty cool milestone. It's just been so crazy to see what this portfolio has been growing into lately. And I was looking on Snowball Analytics earlier today, and I think so far year to date, just for the past couple of weeks in January, I think the portfolio is up just over 5%. So we're kicking off 2026 on a good note. I'm going to knock on wood, because it could just as easily go the other way, but so far, so good. And let me see who's all at all-time highs. I'm seeing a lot of emojis there in the live chat. I love it. I love it. So guys, why don't we kick this thing off the best way we know how? With the 25 minutes or so we got left in this stream, grab whatever it is you're sipping on, and here's to you guys. Thank you so much for tuning in to another Dividend Happy Hour. And I'm so sorry once again that I will be cutting this stream short. It's going to be good for me though. Like I said, I'm really feeling it coming on. And when I think it's more so the flu. I more so think it's the flu. And the reason I'm saying that is because I'm starting to feel the achiness like down my spine, down my back. And usually when I feel that, I know it's a bit more than just the common cold. But nonetheless, cheers. Here's to you guys. Thank you for tuning in. And also, here's the dividends. Here's the pursuit of that sweet, sweet cash flow. And also, let's pour one out for the stock market tonight because it's done really well for us. It's been really good to us so far this year. So, cheers to all of that. Let me know a few things here in the chat. I know we talked about some all-time highs, but I want to hear from you guys. Number one, few things. Number one, what did you buy this week? What did you add to your portfolio? Personally speaking, for the first time in a long time, I actually added a bit to Visa. I picked up about 0.8 of a share of Visa this week, and I'll probably do the same thing next week. I don't really mind the price where it's at. I wish it was a little bit closer to around $300 per share, but you know, pretty decent pullback from where it was recently at. And yeah, so I think 325, between 325 and 330, which is where it's at now. I don't think it's the end of the world to pay for that. But so I bought some Visa this week. Let me know what you guys bought. Number two, what are you sipping on tonight? What did you bring to drink to the Dividend Happy Hour? Before the stream started, I saw someone was sipping on some whiskey, celebrating with some whiskey. But let me know what you're sipping on. Number three, aside from all-time highs, because we already covered that. Aside from all-time highs, did anything cool happen in your guys' portfolios this week? Maybe you hit an income milestone, or maybe, this week was your biggest day of dividends ever, which actually I forgot to cover that, but that was another milestone that I hit this week as well. Yesterday on Thursday, I think I brought in $182 in dividends from 4 different stocks. It was basically like the monthly payers and the REITs. It was Realty Income, Main Street. We had WP Carry Pay, and then Blue Owl Capital Corporation. So all 4 of those, pretty crazy day of dividends. But yeah, then number 4, last thing. Do we have any first timers here in the live stream? Let me know if this is your first time tuning into the Dividend Happy Hour. In case it is, welcome aboard. I'm so happy to have you joining us tonight. It goes for all of you, whether it's your first time or your 159th time. But in case this is your first time tuning into the live stream, we typically do this every Friday night, starting right about now at 5 p.m. Pacific time, 8 p.m. Eastern time. And usually we run it for about an hour. It's kind of the normal time. But yeah, that's all I got for you guys. I do see a super chat right here from Horatio for $5. Thank you so much for the super chat. Can you check out Kimberly Clark or Calm, please? Yeah, we can definitely take a look. We'll take a look at both of those. I appreciate the super chat. Thank you so much. Okay. Let's see. Let me see what else we got in the chat. Yeah, Korean Cardboard bought some Main Street and Realty Income. I see some SCHG and SCHG. Looks like Salvatore picked up some Visa as well. Yeah, Tom with some Vici properties. Nice. And also some Visa. Okay, cool. I'm glad to see I'm not the only one buying Visa this week. Mike picked up some Pepsi. I see some Broadcom and Microsoft and UNH. Yeah, some more Visa and Lowe's. Very good, very good. Chris with some, well, basically the usual suspects. Meta, some Visa, some Walmart, S&P. A lot of Visa tonight. Guys, we are all on the same wavelength. I love to see that. Yeah, looks like Jay picked up quite a few stocks. We got Hess, we've got Nike, Pepsi, Zoetis, and Vici. All of those are looking good. Let's see. Anders here, big buys this week. 5K in SCHD, 3K in SCHY, 600 into IBIT, more Mid-American, which I know has been in your weekly rotation for a while, as well as ESCO, $1,500 there. Very nice. Good stuff. Oh, this is really good, guys. This is Sprite's, it's like Sprite Cherry Lime. Highly recommend it. And once again, I'm sorry for the congestion. I don't know if you guys can hear it, but I definitely feel it over here. Starting to feel it more. Okay, Striper Kid picked up 10 shares of SMCI. Drinking some vodka with seltzer. Nice. Good stuff. Horatio with some Kimberly Clark. Thomas with PGIQ. Which one is that? I'm not familiar with that one. PGIQ. I'm not even seeing that ticker. When I put it into Snapstock, nothing pops up. Okay, Tim with some IPAR. Nice. Good move. And Bank of America, Chevron, MasterCard, Visa, Pool Corporation, and SCHD. Nice little milestone there with SCHD as well. Nice. Jay's first time in the stream. Welcome aboard, my friend. Um, yeah, Rambler Jones, first time as well. Good stuff. Low pick, first time. Great, great. Ooh, Jack, this is a good question. Is Campbell's soup too low at a 5.8% yield? Let's take a look at Campbell's. I'm going to save this one because it's been a while. I used to love Campbell's soup. Used to love that. I invested in that one a while back. Um, PPC Ian put me on a Campbell's soup back in the day, but I don't know. It lasted a while in my portfolio, but I went on to bigger and better things. Nice. Scott's first time from tuning in from Texas. Very nice. And he's retired. That's great. Congratulations. That's awesome. Yeah, I see some more Vici, SHD. Um, yeah, Patrick. So some of you guys probably noticed this happen with a few tickers. So this same thing right here was happening with Realty Income as well. I think it had Realty Income at like over $1,000 a share for the entire day. I checked my spreadsheet and it showed I had like $250,000 in the combined portfolio value, and I'm like, I don't think it's that good of a day on the stock market. Things have been good, but I don't think it's been that good. But yeah, the glitch, at least with Realty Income, it's been fixed. I'm sure if it's not already fixed with Verizon, it will be soon. Those things typically don't last very long. So, um, yeah, can we take a look at Zim? Sure, we'll take a look at Zim. Absolutely. All right, scrolling down. I'm just gonna scroll down in the chat, guys, because this we are cutting it short. And so I want to get to some of these stocks here. Yeah, so real quick though, this is a good comment. So I know this is smaller than most people. Do not discount yourself, my friend. Do not do that. Like any milestone, any small victory is worth celebrating here. So I know this is a lot smaller than most people are, but a big win for me was hitting $1,000 in my portfolio. Man, that's got to feel incredible. I mean, I don't know exactly when you started investing, but hitting that first $1,000 is huge, and it's not going to take you long to get to that next thousand, and then before you know it, you'll be at 10,000 and 20,000, and just keep putting one foot in front of the other. That's all I can say. Congratulations. What is the saying? The journey of a thousand. What is it? The journey of 1,000 miles starts with a single step, or something like that. That's very much true when it comes to investing. The journey to $1 million portfolio starts with the first thousand or the first hundred. So you can't get to the first million if you don't hit the first thousand. So good job. Oh, GPIQ. Okay, nice. Thank you guys. All right. Mm, mm, mm. Okay, guys. Let's jump over to the chat. So first things first, we're going to look at both Kimberly Clark and Calm. Let's start with Calm, which is Calmaine Food. So let's jump over here to Snapstock, which you can also start using, guys, for all of your stock analysis and research. There's a link to this in the description. And I do want to share something real quick. So over the last couple of weeks, for those of you who use Snapstock, you might have noticed that with certain companies, I know Capital Southwest was one of them. Someone emailed me about that. If you put in certain tickers, it wasn't loading the data. We've actually since fixed that. So if you use Snapstock and you run into the issue where none of the charts are loading or anything, you just go up here and then click refresh, and it will fix the issue for you. So I just wanted to throw that out there in case anyone was experiencing that. But anyway, starting here with Calmaine, which I actually don't think I've looked at before. Quite a big drop over the past year, down 25.5%. Really high snap score. I mean, this all looks really promising. No red flags. I mean, this looks ridiculous. A 3 PE ratio, very high free cash flow yield, 11% dividend yield, which is very well covered and is also growing by 300% on average per year. Sounds too good to be true, but let's check it out. Okay. So it's been pretty interesting for the most part over the last decade. It's been flat, right? Like there's really not been a lot of growth, but something happened, after 2021, and it's really started shooting up. That's true on both the top line and the bottom line. But based on at least this chart here over the past 10 years, what we're seeing in these past few years seems to be the exception more so than the rule. And I don't know enough about this company to know exactly why we're seeing this change in the financials. So if you guys have any insight on that, drop them in the chat here. Um, okay, so Nathan says he owns Calm, pure chicken egg commodity play, no debt at all, $1.2 billion of cash, and market cap of 3.7 billion. So with that, with the huge jump in sales and profits and free cash flow, we do see the margins improving. So that's great. Like Nathan said, there's no debt, which is always a great sign. One of my favorite things to see. And they've been raising that dividend like it's nobody's business. So they did well after the egg crisis last year. That makes sense. Okay. That makes sense. So pairing the big jump in dividend payments with the decline in share price, that's why we're getting the yield pushed up so high, which is considerably higher than the 5 and 10-year averages. So here's, I mean, this all looks pretty good. Here's my concern with this company. Potential concern. I would be concerned, like, let's say that all of this cools off and things revert back to the mean. Let's say that the sales and earnings and free cash flow revert back to more what it was prior to 2022. I would be concerned that they raise the dividends so much, unless these are special dividends, which they very well may be. And actually, we can look at that on Seeking Alpha. So let's cross-reference that and see. Because if there's special dividends in the picture here, then this kind of changes what I was about to say. But let's see. So doesn't look like special dividends. It looks like they do just maybe pay a variable dividend, which is fine too, I suppose. But I would imagine based on that, if it's variable dividend, if this calms down, we'll see the dividend per share come back down as well, and probably rightfully so. So I would have to spend more time with this company, but I think there's some great things about it. Them not having any debt is a huge, gives them a lot of brownie points in my book. I love seeing this because at the very least, like, you don't have to worry about this company going out of going into. You don't have to worry about this company becoming bankrupt. So I think that's great. So yeah, I think there's some great things about it. It's obviously come down quite a bit in price. Like it's actually lower than its 52-week low according to this chart. So, could be a good time to buy it if you like this company. Pretty interesting. So what was the other one we were going to look at though? I'm sorry. It was Kimberly-Clark. Gosh, guys, I feel like I'm about to sneeze. Okay. So Kimberly-Clark, and I feel like, we've gosh, it's right there. Goodness gracious. I feel like we've brought up Kimberly-Clark quite a bit. I will say, just generally speaking, I'm not super hyped on this company. It has definitely seen a nice pullback. Sorry, guys. Nice pullback in the past year, down 20%. Snap score is 6 out of 10. So that's not terrible. It is considered above average. Great debt score. Dividends and buybacks looking solid. But growth and margins, pretty lukewarm, which is actually not all too surprising considering this is a very mature, predictable business in the consumer staples sector. So you're not really buying Kimberly-Clark with the expectation that it's going to grow its sales and earnings by, double digits per year. That's not why you would be drawn to a company like this. So I think if you come at it without that expectation, then that's good. Now, with that said, not much growth at all. Like it's not even like a moderate grower. It doesn't even look like. Whereas with Procter and Gamble, which you would put in the same boat, same category of companies, similar stage of its life cycle. At least with Procter and Gamble, you're getting more top line and bottom line growth more consistently than what we're seeing here with Kimberly-Clark. But still, if you're looking for a mature business, a predictable dividend payer, one that doesn't have a huge debt burden either. I mean, it does have, $6 billion, but the net debt to free cash flow is less than 3. That's not bad. Interest coverage is in a decent spot. If you're looking for something that's just going to slowly but surely continue to increase its dividend over time, and you want something that's maybe on the down and out right now, maybe there's a little bit of discounting the share price that can be taken advantage of, which does appear to be the case based on the dividend yield. I mean, 5%, locking in a yield that's a bit higher than usual. Um, I think if you're looking for a company kind of in that realm, then Kimberly-Clark's not a terrible one to consider. I also don't really like I don't really like the deal with Kenvue. I'm not sure the exact status on that, but I'm not super hyped on them coming together to form a company. And one other thing to keep in mind with Kimberly-Clark is the payout ratio is a bit on the higher end. This does look to be, it typically it looks like the payout ratio is a bit higher anyway. Free cash flow payout ratio is actually better than the earnings payout ratio, so that's good. But I would say that this is probably something to keep an eye on. It's okay. Like typically, when you get these mature businesses like a Kimberly-Clark, they will come with higher payout ratios than something that you'd see from like a Microsoft, excuse me, or a Visa or something like that. Um, and typically they can still sustain their dividend with these higher payout ratios. That's kind of just the nature of the beast with these bad boys. But yeah, I think it just depends what you're looking for. Kimberly-Clark, steady dividend payer, nice dividend growth history, not a lot of dividend growth, but buying it right now, you can lock in a nice high yield. So, um, and it doesn't look like that dividend is at risk of being cut right now. So yeah, I think that there's some merit to it. Certainly has some merit to it. Okay, so yeah, so real quick, I'm looking at the chat right now. One thing. So great question right here. Coincidentally, I'm actually putting out a full store update tomorrow morning about the Walmart store, and it'll go out first thing in the morning. And this video is going to basically cover all of my numbers from 2025. I'll break it down, Q2, Q3, Q4, because I started the store like my first day of sales was at the end of April. So I'll break down all of the sales and profits month by month. With the quarterly breakdowns as well. And then I'll show you the full year results like sales, profits, total dollars invested, return on invested capital, all the numbers I will break down in full in tomorrow's video. And for those of you who've been keeping tabs on the store, some of the numbers will be different, slightly different from what you've seen in previous videos, because as time has gone on, things like returns and reimbursements have impacted some of the monthly numbers along the way. And so I account for those things in this video going out tomorrow as well. So if you're curious about the Walmart store and what's been happening with it, you'll like that video. It's a good one. Real quick too, I do see a question here from Vorfs. I know I'm not pronouncing that right. But I do see this question here. It's what do you think about growth stocks that pay dividends? I mean, I'm all for it. I love my dividend payers. I think, you should invest in companies that are growing over time. And I think if you can combine the two, I think that's a great thing. And I like to think that a lot or all, I shouldn't say, well, kind of like we were talking about with Kimberly-Clark, growth will come in different levels. But a lot of the businesses I personally own are I don't want to call them growth stocks. Because I like, what does that even mean? What is a growth stock? What is a dividend stock? But they're companies that are growing pretty well, that are also paying dividends, that are also growing. And so, I think I think those are the best kind of companies you can own. Okay, so we looked at Kimberly-Clark, we looked at Calm. We're gonna go look at, yeah, Danny. I'm excited that you're excited. It's been a while since I've talked about the Walmart store, and sorry to linger on this topic. We'll take a look at two more stocks and then call it a stream. But I think moving forward, because it's been a few months since I did an update on the store, but moving forward, I'm going to put out store updates every other month. So I'll do one tomorrow. I'll do another one in March, May, July, so on and so forth. I think every other month is a good cadence for these. And I'm in a good rhythm with the store right now too. Like I'm in a good routine where like I kind of have, I don't want to say the inventory turnover like down, but I'm a bit more now that I've been doing this for, almost a full year. I kind of am getting it. I'm kind of getting a better sense for the inventory turnover. And that was one of the things that that was difficult for me to get used to at first, because I'd find myself like I'd have a lot of inventory, then I'd sell out of it super quick, and then it'd be like a month and a half or so before I'd have any more inventory, which is kind of why I wasn't giving store updates, because there wasn't really a whole lot to say. A big reason for that, because I wasn't doing a good job of investing, letting that inventory being turned over. Like I didn't have the cadence down right, if that makes sense. And I'm in a good spot with it right now. So I think there will consistently be more to talk about. At least I hope so. And hopefully that makes sense too. It's been a really fun thing. But anyway, enough about that. So Jack, let's take a look at Campbell's Soup. You said the yield's at 5.8%. I didn't realize the yield had gotten that high. But let's go back over here to Snapstock. Jump over to Campbell's Soup. What is Campbell's Soup? Whoa, sorry. That was my other computer here. So I'm on my laptop right here. Camera's plugged into the laptop. I'm screen recording from my desktop. So sorry for that echo there. Why can't I remember Campbell's Soup? Why can't I remember the ticker symbol? It's been way too long. CPB, that's what it is. Goodness gracious. When you get to be my age, guys, you don't remember things like you used to. Okay, so Campbell's Soup. So according to this, in the trailing 12 months, their yield is actually closer to 6%. Maybe on a forward basis, it's 5%, but let's see what Seeking Alpha has. So yeah, 5.8% over on Seeking Alpha. Not too far off. Down 30% in the past year. PE ratio is down to a 20. So their earnings must have declined. Free cash flow yield is very high. Yeah, I'm guessing that's what happened. I'm guessing their earnings per share declined. Very high free cash flow yield though. So yeah, I mean this. Very interesting. So sales are going up pretty well, 5%, but earnings per share has been terrible. Big red flag right here. So earnings per share has declined over the past 5 years. Clearly, we can see that. Same with the free cash flow per share. Since 2020, it's really been on a downward trend. Well, actually, no. Even going back to 2016, it's had its ups and downs, but the general trend is down over the past decade. So that's not good. Margins are declining as a result as well. Big jump in debt. The net debt to free cash flows at a 10 or 8.25 in the trailing 12 months, which when paired with declining free cash flow, that's not a good sign. Interest coverage is declining as well. It's a 4. It's about half of where I'd like to see it. I mean, yeah, the dividend yield's nice, but the sustainability of that dividend is definitely being called into question. And I actually think, you know what, guys, before I forget, I want to write this down, because every so often I like to do those videos where I talk about stocks that, look like they could cut their dividends. I think that Campbell's Soup is looking like a pretty solid dividend cut candidate. So I want to write this down. I usually have like a running list of, stocks that look like they're about to. And let me know in the chat while we're on the subject of this. Let me know if you guys have any suggestions for stocks that look like they're about to cut their dividends. Here's the ones that I have written down so far that I haven't already talked about. So I have PII, which is Polaris, and I wrote this one down a while ago. So the situation could have changed, but now it actually still looks pretty bad. So that one I have MTN, which is Vail Resorts. This one looks like a potential dividend cut candidate as well. Surprised they haven't cut it already. Who else we got? LYB, LyondellBasell. Oh my gosh, guys. Sorry for all the sniffles. Oh, I got to sneeze right there. Oh, man. And then last but not least, we have Campbell's Soup as well. So I have those 4. Let me know if you guys have any others. Yeah, so Alex says Wendy's. Yeah, I think it's right there. That's it's going to bother me. Excuse me. One more. Sorry, guys. Excuse me. Okay, so let's reload this chart right here. Okay. It might take a minute to load. Goodness gracious. Okay, there it goes. So you see that in action. I'm glad we got to see that in action. If it doesn't load, all you need to do is click that, click the refresh button, then reload the page, and it should be good to go. So Wendy's, really, huh? It looks like they did cut their dividend, right? If I'm reading this right. Did they already cut their dividend? Yeah, so they already reduced it. They cut it in almost half. So anyway, let's go through one more company, guys. We're gonna look at Zim, which on the topic of dividend cutters, this one has always been, like, in my mind, a big old yield trap. And I remember back in the day, maybe like 2021, 2022. Maybe you guys remember this too, and maybe I'm getting my years mixed up, but it was somewhere in that excuse me, in that vicinity. We got to refresh this one too. It was somewhere in that vicinity where Zim was like the talk of the town. It was the hot dividend stock. Everyone was talking about Zim. And at the time, they had a crazy dividend yield. I don't even remember what it was. Maybe it was right about where it's at now, 20%. They've had a really good year, up 70%. And yeah, but I mean, it's all over the place. These financials are all over the place. And as a result, the dividend is too. I mean, huge jump in debt. But yeah, I mean, interestingly, the dividend has actually gone down over the past few years consistently since 2022. And I don't know, like, I don't quite remember what their dividend policy is. I think they have, I don't think they have like a strict, dividend policy like a Procter and Gamble would, or Pepsi, or Microsoft. I don't think that they pay the dividend with the intent that they're going to grow it every year. I think it's variable based on like a percentage of earnings, or something like that, or percentage of free cash flow. It's kind of, I could be mistaken about that, but that's kind of what I remember from back in the day. And that's fine if that's the case. But I would say that if you're looking for growing income that will grow, over the years, Zim is not one to look for. But with that said, if you would have held this stock over the past year, you would have made out pretty well. And actually, just over the past few months, if you would have bought this back in October, you would have done really well. So yeah, and it's actually surprisingly, like, it's been a really, maybe this was when it was trendy, who knows? But surprisingly, it's been a really solid performer too. So take what I say with a grain of salt, for sure. For sure. But anyway, guys, I think we're gonna wrap it up here, unless you guys have any last questions. I do see one right here that's kind of interesting. This is from Dreamwork Drive. Do you focus on American dividend stocks only, or have you also considered European ones as well? Yeah, I've considered a couple European companies in the past. I was pretty close to buying LVMH at one point. I've looked a lot into L'Oreal, and I really like both of those companies. But I'm just more comfortable investing in companies that are based here in the United States. I think when it comes to those French companies and their relationships with the government there, and I just don't really understand that, and I'm not too comfortable investing in that. Um, and so for that reason only, I stay out of those companies and stay out of European companies. And there's also like extra dividend taxes on top of that. So I'm not, yeah, I'm just not inclined to get into that. Wow, I think I'm missed a whole bunch of chats here. Holy cow. I got a flood of chats just coming at once. Something's definitely wonky with the stream tonight. Okay, so let me get caught up here. Sorry about that. Um, yeah, do you think Berkshire will have a dividend with Buffett gone? Honestly, I'm not sure. I really don't know. Thank you guys. A lot of you saying bless you. I appreciate that. Oh, QSR, a potential dividend cut candidate. Let's see. That's quick service restaurants or restaurant brands. QSR stands for quick service restaurants, which is the type of restaurant it is, but I thought that was the company name. E Yeah, this potentially. Let me show you what I'm looking at. So this is QSR's dividend stats. Um, still looks pretty well covered based on the free cash flow payout ratio, but the earnings payout ratio is getting a bit dicey. Although it has kind of been coming down over the past few years. So um, yeah, Kevin, that's good to know. Thank you for saying that about Campbell's. That's good insight. So dividends rate their dividend is borderline safe. And I don't know, guys. I don't know why. Like I said, I just got a huge flood of chats coming in the live chat that were probably sent like minutes long before I am actually seeing them. But I don't know why they all populated at once. Yeah, UPS is definitely on the list for sure. I think Altria, Altria is kind of an interesting case. I think their dividend is probably it's still going to be around. They still have room to pay and grow this dividend. The questionable thing about Altria is the revenue, because as we can see, the sales have been declining, and this is why Russ has called it, and I will parrot him, called Altria a melting ice cube, and this is one of the reasons that I ultimately decided I kind of want to get out of this company for now. It pays a nice dividend. I do think the dividend is still safe because as we see, the earnings per share are still growing. Free cash flow per share is still growing. So they're doing a great job of controlling costs and becoming more efficient throughout the business. But they're just not doing a great job of transitioning to that smoke-free future. It doesn't seem like they've been able to get any, get any solid ground there. And the debt situation still looks good. Net debt to free cash flow is only 2. Interest coverage is double digits. I mean, like I said, it still looks, based on the payout ratios, it still looks to be in pretty good shape. And Altria, I mean, this might look high, but Altria has always had has always had higher payout ratios. That's by design. So I still think their dividend is going to be safe for a while. Okay. Yes, Dow did cut their dividend. It's funny. I maybe it was about this time last year. I put out a video talking about Dow. There were 2 other companies. I don't remember what the other 2 were off the top of my head, but Dow was one of them. Basically, 2 out of the 3 companies in that video, probably within a couple months of after posting that, ended up cutting their dividends. So definitely lucky timing on my part there. Okay, guys. Okay, wanted to look at BTI. We'll look at BTI just real quick, okay? And then we'll wrap it up after this. So, wow, really good year for British American. Up 66%. Nice free cash flow yield. What's up with the negative earnings? Are their earnings really negative? I don't think this doesn't look that great. I mean, earnings per share is pretty stagnant. Free cash flow per share has been slightly growing. The revenue growth is more than what we saw for Altria. Yeah, debt's looking pretty good. The dividend's a bit more well covered, or historically has been, but 2023 and 2024 were a bit dicey based on the earnings and the net income, but still based on the free cash flow payout ratio, it looked pretty good. So, I mean, yeah, their dividend still looks pretty well covered as well. I mean, it just looks to me like very similar financial profile as what we saw with Altria. And while we're at it, let's take a look at Philip Morris. Just cover all our bases with these. Philip Morris has also had a really good year. It's going to have the lowest yield out of the 3, but definitely does seem to have the most growth. I think a lot of this, I think they're just doing a much better job of the smoke-free products than Altria is. Zyn has been a really, really good thing for them. Earnings per share has kind of had its ups and downs, but yeah, free cash flow per share looks, for the most part, pretty good, I'd say. Yeah, debt still looks okay. Big jump in debt over these past few years, though. Acquisition related, I'm sure. And maybe that's what it is. Did they buy Zen and some sort of acquisition in there? With that, though, the earnings payout ratio has really been pushed up. So, interesting. So, out of all of these companies, I would say that Philip Morris looks like the biggest dividend cut candidate out of the three, just based on what we're seeing right here. So, yeah, that's interesting. Very interesting. But I will say, out of the three, I mean, payout ratios aside, out of the three, Philip Morris operationally seems to be getting it right. Um, okay, guys. I think this is a good place to wrap it up. Last question before I let you guys go. I think this is pretty good, about 45 minutes when it's all said and done. Last question before I let you guys go. It's obviously a long weekend. Monday, the market's going to be closed. Tuesday, any thoughts? What are you buying? What's looking good? Any big plans for this upcoming week in the portfolio? Let me know what you guys have your sights set on going into next week. Personally speaking, and we'll see what happens between now and Tuesday, but personally speaking, I'm probably just going to keep rocking with Visa for the time being. It's not the most deeply discounted stock in the portfolio, but I don't think it's a terrible time to swoop it up. I think its share price is being negatively impacted by the talk of, capping interest rates, but I think that's okay. I think that's just kind of noise. We'll see if that actually comes to fruition. And from my understanding, it seems like they're only talking about doing it for a 1-year period. And so I don't think that's a huge deal. And actually it probably could be good for Visa. I think if we'll see, I'm just kind of thinking out loud right now and thinking through this issue too. Um, But I'm thinking if they were to cap interest rates at 10% for a year, first and foremost, that's going to impact the issuers of those cards, the people who actually collect that interest income, which is going to be banks like Bank of America, JP Morgan, whatever. It's not going to be Visa and MasterCard because they're just a payment network. But if they cap, and so if they were to make it 10% forever, can't do more than that, then what we'd probably see is these issuers be a bit more picky, a bit more choosy with who they issue credit to, which would decrease the circulation of cards. They would issue less credit. So that wouldn't be a great thing for anyone in this space, including Visa and MasterCard. But if it's just for a 1-year period, I think that these banks will probably take advantage of that. Well, actually, I shouldn't say that. I think that if it was just capped for a year, I don't think a whole lot would change. Um, I think they would just write it out for a year, and I think in the meantime, the consumers, people like us who use our credit cards, I think we'd probably take advantage of that even more. I think we probably would use our credit cards more, knowing that there's that temporary cap. It's like getting a discount on your spending, basically, but or on your interest. But so I think that could actually be a good thing for companies like Visa and MasterCard in an interesting way. Just kind of thinking out loud. And there's probably another side to that as well. But yeah, let me know what you guys are thinking. It looks like the live chat's being kind of laggy again because I'm only seeing chats from like 4 minutes ago. And I know there's some more that have come in from that. So let me see if maybe I can open this. No, it's still not showing it there. Let me go over to open the actual stream on YouTube. Oh goodness, see if it's live over there. Okay, so I see the updated chats here. It's just not pulling through to StreamYard. So yeah, Vasco says Visa. Yeah, I see some more Visa, lots of Visa. Chris says Uber. Yeah, Tim says 10% cap wouldn't impact Visa and MasterCard. They're a toll gate. The banks, on the other hand, yeah. 10%, we'd see a massive pullback. The implications would be massive because credit lines would decrease all over the place. Yeah. Payday loan companies will make bank. Yeah, that's a good point. And I think that that would only apply if it was a long-term cap. I think if it's a year, like I said, I don't think there would be much change. Credit limits would drop. Yeah. Dang, Anders, you have a pretty crazy line of credit there. Nice. James, where's your hoodie from? This is from H&M, and I've had this sweatshirt for probably okay, now it's pulled up. Okay. Anyway, guys, yeah, we're gonna wrap it up here. Almost 50 minutes, so almost a full stream tonight. Once again, I'm sorry for cutting it a little bit short. I think it's necessary though. But I hope you all have a great weekend, a nice long weekend. Stay out of trouble out there. Thank you guys all so much for the support and for tuning in, and for hanging out with me these past 47 minutes. It's always a good time. We should be back. Yeah, we'll be back next week with the stream for sure. But yeah, I hope you all have a great weekend. Is there anything else I got for you? Yeah, tune into tomorrow's video. It's going out first thing in the morning. All about the Walmart store. Really good video, really good year in the store. So I'm excited for you guys to see those numbers. But yeah, you guys all keep up the good work. Have a great weekend. And yeah, hope we get another good week next week. We'll see what happens. Yes, Tim, we'll have a deep end episode coming out Sunday. All right, guys, have a good night. I'll see you in the next one.